Ever wondered what support and resistance in trading are? Well, you're not alone. These are fundamental concepts in trading that are crucial for understanding market dynamics. Picture this: the market is a battlefield and the prices are soldiers. Support and resistance are the lines these soldiers don't cross. They form barriers that prevent the price of an asset from being pushed in a particular direction. Think of support as the floor that catches the falling price, and resistance as the ceiling that holds the rising price. The terms may sound technical, but they're quite simple once you get the hang of them. They're like the pulse and temperature in a medical checkup, telling you the health of the market. So whether you're a novice trader or a seasoned investor, understanding support and resistance can give you an edge in the trading world. Now let's dive deeper to understand these terms better. Imagine you're observing a downward trend in prices. Ever thought about why they stop falling at some point? This is where the concept of support in trading comes into play. Think of it like a ball falling from the sky. It keeps dropping until it hits the ground, right? The ground in this case acts as a support that prevents the ball from falling further. Similarly, in trading, when prices are falling, they eventually reach a point where the demand is strong enough to stop the decline. This point is referred to as the support level. It's like a safety net, catching the falling prices and preventing them from plunging further. This happens because as prices get lower, they become more attractive to potential buyers waiting on the sidelines, increasing demand. When this demand matches the supply, the prices stop falling. So, in simple terms, support is like a safety net that prevents prices from plunging. On the flip side, have you noticed prices climbing and then hitting a ceiling where they can't go any higher? Now, imagine a helium-filled balloon soaring upwards, but eventually, it hits a point where it simply can't ascend any further. This point, my friends, is what traders call resistance. Just like a balloon hitting the ceiling, the price of a security often encounters an upward limit. This resistance level is the point at which an increase in supply or selling pressure overpowers demand, halting the price climb. As prices rise, there comes a point when sellers start dominating the market because they believe that the prices are now too high or they have reached their target. This could also be due to buyers' reluctance to initiate new positions considering the high valuations. In essence, resistance is a crucial checkpoint in the trading world. It is here where the supply begins to outweigh demand, effectively stopping the price from rising further. So, resistance acts as a barrier that caps the rise in prices. So far, we've unraveled the mystery behind support and resistance. Let's take a moment to reflect on these key concepts. Remember, support is like the floor beneath prices, halting their downward journey. It's where demand, slowly rising, finally meets supply, and prices stop falling. On the other side, resistance acts as the ceiling, a point where the selling pressure overcomes the buying interest. It's that level on the price chart where supply begins to outweigh demand, causing prices to stop climbing. These concepts aren't confined to any specific time frame. They can be identified across daily, weekly, or monthly charts, and even on minute-by-minute charts. The longer the time frame, though, the more significant the support or resistance. Spotting these levels requires careful analysis of chart patterns, anticipating where prices might halt or reverse. Remember, understanding support and resistance is a fundamental step in your journey as a trader. So keep observing, keep learning, and let the market trends be your guide.